right, let's dig in a little bit more to those two core concepts we were talking about, revenue and expense recognition. And then I had briefly mentioned how there's the cash basis method of accounting, and then there's accrual basis method of accounting. And that we as individuals, we kind of follow this cash basis method of accounting. But in this class, and in financial accounting, we focus on accrual basis. Okay, so let's talk about the differences. So under cash basis, when do we consider something revenue? When do we consider it an expense? So under the cash basis method, something is a revenue when cash is received. When cash is received for our goods and services. Remember, we defined revenue in chapter 2. We said revenue is the value of our goods and services. So when that value is received in cash, when that value is received in cash, then that for cash basis record keeping is considered revenue. For expenses, we consider an expense, we record it when cash is paid for normal operating expenses. Right? In chapter 2, we defined expenses as normal operating costs to run the business. So when those normal operating costs are paid in cash, it's considered an expense. And we remember from chapter 2, when we subtract expenses from revenue, that gives us net income. Okay, so that's how net income is calculated under the cash basis. Let's see how that differs for accrual basis accounting. So accrual basis accounting says that we consider an item revenue when it's earned, which is consistent with that revenue recognition policy we learned about back here, right? Okay, when earned, regardless of when cash is received. Let's see, revenue is considered revenue when earned from providing goods and services. And that's regardless of if cash is received or not. Okay. Under accrual basis, when do we consider something an expense? When incurred. So when incurred. Incurred, it just means when benefit occurs. Okay, because that represents a legal obligation to pay. And that's regardless if cash is paid out yet. We subtract our expenses from revenue. That gives us net income. Okay, so let's look at an example of how the two are different. Okay, so here we have a company. So here's our example. Flitwick offers dating consulting services who men to wish to become more charming. He has the following events during the year. We're going to calculate his net income under both accrual and cash basis. So keep those definitions in your back pocket there. And let's go ahead and get started on this one. And you're welcome to try to pause and try and work it out on your own as well. Okay, so let's do cash basis and accrual basis. They want net income, which we know is revenues minus expenses equals net income. And that's for both net income calculated under accrual or cash, right? It's the same formula, expenses from your revenue. It's just the timing of when do we consider something a revenue, when do we consider it an expense. All right, so revenues earned. Ooh, there's that keyword earned. So I honestly don't need to finish reading that sentence for accrual basis because it's all about when is the revenue earned. All right, for cash basis, it has to do with when cash is received. So I'm going to care about that second sentence for cash basis. 28,000 is received in cash. So for cash basis, only the amount received for our goods and services counts as revenue. Expenses incurred is 16. So for accrual basis, I don't have to read anything else. Incurred, 16,000. For cash basis, I have to know how much has been paid. Okay, we've only paid 8,000. 8,000. All right, some additional items. The company purchases a 12-month malpractice insurance policy. So if it says purchased and it doesn't say on account, right? It doesn't say on account. So you assume that it's cash. The purchase was made with cash. Okay, so insurance is a normal operating expense. So under cash basis, if it's a normal operating expense, cash is paid, we call that an expense. So this policy of 2,400. Under accrual basis, we can't call it an expense yet, because if you remember our expense recognition principle, we said we have to call it an expense when we benefit from it. This is a 12-month insurance policy. We're not going to benefit for all 12 months on the last day of December. Okay, so for accrual basis, this is actually considered an asset. Assets are not the same as expenses, so there's no additional expense under accrual basis rules. Then our last one, Flitwick encourages his customers to place deposits for future work. Total deposits are $4,000. So we received $4,000 for our goods and services. It was just a prepayment, but under cash basis, just has to do with when do we receive the cash. Under accrual basis, we can only call something revenue if it's been earned. This isn't happening until the future, so there's no way we could earn it in the past. We haven't done it yet. Okay, so I think you get 14,000 for accrual basis, and that's what we get for cash. $21,600. Okay, so your net income will not necessarily be the same. Most of the time it won't be for cash and accrual basis. And maybe this helps to illustrate why the SEC says if you're a public company, you have to use accrual basis. It just is more tied to like your legal obligations, your legal entitlements, right? If we've performed the work, then we're legally obligated to collect it. If not now, then in the future. The law is on our side. And same thing for expenses. If we haven't paid it, we are legally obligated because we've already received the benefit, right? So it's more tied to the law and the legality of it. So that's why accrual basis is seen as a little bit more correct, but also it's less likely to be manipulated. Okay, so it's harder to manipulate, less likely to be manipulated. Not that you can't manipulate it, but it's a little harder, right? Whereas with cash basis, we could just avoid paying cash in one period. We could just delay the payment of our expenses to bring this amount lower, right? Or we could tell our customers to prepay so that we could get some additional prepayments, and under cash basis, that would be called revenue. So we could delay our expenses, which bring expenses down, encourage prepayments from customers, which would bring revenue up, and which would show higher revenue than we're legally entitled to. All right, go ahead and try the exercise for this one and see if you're able to kind of understand and perfect the differences between these two popular systems of accounting.